name is Kevin Matthews and I am the tax professor. Welcome back to class. Still in session because the learning never stops. Basically today we're going to talk about a topic that I kind of tangentially talked about in a previous video. But what I want to do is I want to go ahead and hit it to a specific point. In a previous video that I did actually in the previous season, we talked about military veteran benefits, and we also talked about some various aspects of certain things that military veterans, military members, and retired members get to do that perhaps civilians don't necessarily get to do. And so one of the items that we kind of talked about here is if you leave the military and you get separation pay, there's a specific tax treatment that usually happens with that. And in the video that was in question, I really focused on what would be the tax effect in the year of receipt. I didn't really talk too much about what would end up happening if if you ended up having to pay it back. And that's a question that I get a lot. It is also a question that I used to deal with, not just in military issues, but also in some non-military issues. And so this video, of course, is titled "The Claim of Right," and that's basically what we're talking about here. And so what happens is, I'll kind of set this up. The claim of right actually came about primarily due to several court cases that were settled, and then there's also, of course, the Internal Revenue Code IRC 1341 that actually addresses this in more detail. But a lot of it was the fact is so say for example I'm going to receive some money. I know how much the money is. I know that I'm entitled to receive it, and so what happens is they go ahead and they give me the money. Okay, so in order to kind of keep this to where it actually fits more towards probably a more concrete example, let's give some numbers to this. So I'm leaving the military. They give me $25,000, and they say, "Okay, Kevin, it's been real, it's been fun, but it ain't been real fun. Go away. Okay, here's your $25,000." And I say, "Fine." So I take that money and I go out and I'm going to go spend it on something. Later on, the military comes back to me and says, "Hey, you know what, Kevin? We've come to the realization that we shouldn't have given you that money. So we want you to pay it back to us." Now, some of you might think that this is unfair, but it actually happens quite frequently. I'll get into that a little bit later on. But just to keep up with the example so that we can move along. So I pay them back the money. So here's the thing. In the year that I actually received the money, and we'll say that I had to pay it back, say, in 2 years. So I receive the money. It becomes taxable income to my tax return immediately. Okay, so I have to put it on my tax returns, and then what ends up happening is I have to pay taxes on that money. In the year, 2 years later, when the military says, "Hey, Kevin, you got to pay this back to us," what ends up actually happening is that I don't go back and amend the tax returns where I received the money, because I officially received money at that time. It was determined later on that I no longer had the right to that money, so I had to give it back. This is what we call the claim of right. And so what ends up happening is that you pick it up as taxable income in the year received, and then later on in the year that you actually determine that it's no longer your right to it and you pay it back, you then get to take a tax deduction or a tax credit off of that. And so what ends up happening is there's a long calculation. I don't want to go into it because to be honest, most of us CPAs, we have spreadsheets that actually do this for us. And so what'll happen is you'll tell us how much money it is, what your income is, blah, blah, blah. And there's a lot of factors that kind of play into this as to how's the best way to proceed with this. What I really want to talk about, though, with this is some of the latest changes that happened as a result of the previous tax law that was passed back in 2017, the Tax Cuts and Jobs Act. So prior to 2017, you had two different types of miscellaneous deductions. You had miscellaneous deductions subject to 2% of your adjusted gross income, and then you had miscellaneous deductions not subject to 2% of your gross income. And what would end up happening is that depending on how your deductions fell out was how valuable it was. And so the claim of right deduction that's actually brought out here really focuses, I mean, they give you basically kind of a threshold item that you have to get over in order to go one way or the other. And that magic number is $3,000. So if your claim of right. So say, for example, in my example with the military, I received $25,000. I got to pay it back. So I'm well over that $3,000 limit. I get to take the $25,000 deduction as a not subject to miscellaneous itemized to the 2% rule. And so what ends up happening is essentially I get a $25,000 write-off on my Schedule A deductions. So that can be kind of valuable. I mean, it depends on how your tax situation flows out and whether you're itemizing your standard deduction anyways as to whether it is. And like I said, it's a complicated calculation. I don't want to get into the weeds about it right here. But if you're under $3,000, say for example, the military said, "Hey Kevin, here's $1,000 that we're going to give you," and then 2 years later they realize, "Oh, sorry, we made a mistake. You got to give us the money back." What ends up happening actually in that case is under the old tax rules, I would get to take it as a miscellaneous itemized deduction subject to 2%. Those went away in this last tax rule. So as a result of that, I don't get to take that as a deduction anymore, which really kind of stinks because, like I said, this actually kind of hurts military people. But it's not just military people that actually play with these the claim of right rules. There's a lot of circumstances where you could actually have this, and as I've said in previous videos, one of our expertise areas is international taxes. And before I went into business for myself, I actually used to work for one of the local Big Fours offices out here, and we used to deal with claim of right issues all the time because what would happen is the company would agree to pay for somebody's taxes. They'd pay the taxes, and then the following year they'd do the calculation and say, "Oh, sorry, we accidentally overpaid you. Here's your money back," or here's the money that you owe us, or whatever. And so claim right issues were always kind of happening with that circumstance. But you could also see it where, say for example, you're working in a business and somebody says, "Okay, we're going to give you, we're going to give you $150,000 to do XYZ for us." Okay, they pay you the money. And then what ends up happening is you say, "Okay, I got $150,000 to do this work." You get to the following year and realize the work can't be done. They want their money back. So you got to give them their money back. Now, in that business circumstance, you would not actually take it as an itemized deduction. It would actually go on your Schedule C because it would be a sort of a refund as it would be. But it's what I'm trying to kind of get at is that this claim of right idea doesn't just exist with military people. So I don't want you to get that kind of idea that that's the only way that it happens. Okay, so anyways, that's all I got to say for today's video. Thank you very much for coming here. If you have any questions for me, go ahead and leave any comments down in the comment box below. You can also reach out to me at my company's website at www.betasolutioncpa.com. That's www.betasolutioncpa.com. Please go ahead and like we said in some of the previous videos and going forward, if you like this video, please go ahead and hit like. We'd really appreciate it. And then if you really like the video series, please hit subscribe. I promise it won't be too crazy. We upload videos when we can, and we've only done a few. Actually, we've done quite a bit more than a few of them. But I don't think it's insane. But I would really appreciate if you guys would do that so that we can spread the word so that other people can learn about these various issues within taxation. Again, thank you very much for watching.